Good day and welcome to our class for taxation. We are going to be looking at some past questions in ATS3. So I am on the insight of 2024 March. So let me take that into consideration. Insight March 2024. That's our focus for this class. Now, we'll be taking only the calculation part. So the part that are theoretical, we'll skip it. So question number 1, we're going to skip that. Question number 2B had been solved in one of our past videos. So I implore you to look at that. Question number 3 will be skipped. And now let's go to question number 4. Mr. Otoge was employed by Xenon Bank Limited as head of banking operations effective June 1, 2021. So this is when he started his job, June 1, 2021. Now, the details of his salary are, so this thing looks like personal income tax. I'm seeing salary and I'm seeing Mr. So it's a person and this is a salary. We are about to look for personal income tax. And we know that personal income tax is based on actual year basis. Now we look at his salary. This is from 2021. So it means that what we are saying is that from June 1, from June 1 to December 31 is 7 months. So if this is going to be annual per annum, this is going to be divided by 12 to get that of 1 month. Then you are going to multiply by 7. So that shows you that this basic salary is going to be prorated. And that applies to everything here. They are going to be prorated because all of these things are in per annum. Now, Mr. Otege was provided with official car, and the cost of the car is 7.5 million. Normally, if you are given official car, it's supposed to be a benefit in kind. And for official car, we take 5% of the cost of the car. Now, because 5% of the cost is the annual amount, we are still going to prorate it by 7 months. He was also provided with a driver and a private assistant who were paid 330,000 and 300,000 and 500,000 naira per annum respectively. You will still divide by 12 and multiply by 7. Now, prior to joining Xenon Bank, Mr. Otege was on an annual salary of 32 million per annum while working with Carbon Bank PLC. Now he resigned from the bank on 31st May. That means he resigned 31st May. The next day, he started working with this Zenith Bank. So this annual salary of 32 million, we are going to divide it by, sorry, we are going to divide by, sorry, we get it straight here. We are going to divide by 12 and multiply by 5 because January till May is 5 months. So that's what we are going to do. Then additional information, Mr. Otege is married with 6 children, all are of school age. He maintains his aged parents who lives with him in Lagos. This information has no tax implication other than for you to take care of these 6 children, your wife and the parents. There is something called CRA, which is consolidated gross and consolidated relief allowance, which is what is granted in place of dependent allowances. So this information here has no tax relevance. He paid an annual life insurance premium of 3 million. Okay, this is a tax exempt item. His employers deducted and remitted on his behalf the following mandatory deduction of 4.9 million and 1,116,667 for NHF and pension respectively. This is also a tax exempt item. He paid his NHIS premium of 350,000 in 2021 to health service provider to provide medical cover for himself and his family. This is a tax exempt item. Now you are required to calculate the tax liability of Mr. Otege for the relevant assessment year. So because this has to do with 2021, his year of assessment, I told you it's actual year basis, so it's going to be 2021. So we have all we need. So let's go, Mr. Otoge. So this is question 1, Mr. Otoge. We now say tax liability for year of assessment 2021. So that's it. 2021 year of assessment, tax liability, this employment income. So look at what I'm going to do here. I'm going to put my 2 naira sign here. Let me change the color of this pen so that when we're solving. So let's start with new employment. New employment. I will say this is June 1 to December 31. So everything I'm putting down here is for June 1 to December 31. Okay, so what do we have? Basic salary, 48 million. So I will say cash emolument. we have basic salary. So that will be 48M divided by 12 and multiplied by 7. So we have 48 million divided by 12 and multiplied by 7. 28 million. So I'll put it down here. 28 million. The next one is the next one is housing allowance. That's 12 million. Housing allowance. That's 12 million. 12 million divided by 12 times 7. That should give you 7 million. The next one here is transport allowance, 2 million. Transport allowance, 2 million divided by 12 times 7 months. So we go 2 million divided by 12 times 7. Okay, let me do it this other way. 2 million times 7 divided by 12. Still getting the same thing. 1166667. 1166667. So I have 1166667. That's my transport. Utility is 800. Utility allowance is 800. 800 is something as 0.8 million. It's 800 divided by 12 times 7 months. So 800 divided by 12 times 7 months, 466667. That's 466667. Then we have meal allowance, 500. So the next one is meal allowance. That's 500 divided by 12 times 7. So we have 500 divided by 12 times 7. That will give me 291,666. 667. 291,667. The next one again is leave allowance, 4.8 million. Leave allowance 4.8 leave allowance 4.8 million. Now you're going to divide by 12 multiplied by 7. That will give me 2.8 million. Then the next one is clothing, 2 million. So clothing allowance, that will give me 2 million. It is the same thing as transport allowance, the same figure. So divide by 12, multiply by 7, and I have my 1,166,667. So I am done now with my cash emolument. All I need to do now is to add them up. I'll just add them up here. So let's start again. 28 million plus 7 million plus 1,166,667 plus 466,667 plus 291,667 plus 2,800,000 plus 1,166,667. That gives me 48,91,668. 48,91,668. That is sure. 48,91,668. Okay, so that's your cash. Then we have benefits. Benefits in kind. So under benefits in kind, official car. Official car, the cost is 7.5 million. So we'll say official car. So what we are going to do, we are going to take 5% of the cost, which is 7.5 M. That's what it says, 7.5 M. And we are going to divide it by 12 and multiply it by 7. So let's do that now. First, let's find the 5 over 100, that's 5%, multiplied by 7.5 million. Okay, now divide by 12 and multiply by 7. 218,750. So that will be 218,750. So that's the first one. Then he was also provided with a driver, personal assistant. Driver is 300, personal assistant 500. So I will say this is driver PA. Driver is 300, PA 500. So this is going to be 300 is going to be 500. You are seeing me putting millions. This is 0.5 million. 500,000 is 0.5 million. 300,000 is 0.3 million. So they are the same thing. Then I'm going to divide by 12 and multiply by 7. I will divide here by 12 and multiply by 7. Because these are annual figures, we need to find the figures for the period. So this is 300 divided by 12 and multiplied by 7. 175,000. So this is 175,000 here. And let's do the next one. 500,000 divided by 12 and multiplied by 7. So that was the same thing we did somewhere here. Yeah, for meal allowance. 291,667. 291,667. All right. Let's see if there's any other benefit in kind. Excuse me. So that's all for the old company. Benefit in kind has ended here. So let's close this. So that would mean that we have 218,750 plus 175,000 plus 291,667. And that gives us 685,417. You don't understand why we got 5%. That is the law. We said that if you are provided with official car is not a salary, now it's an asset. You cannot just carry the cost of the car and dump it as 1 year's amount. Every year, you deduct you take 5% of the value of the car. You take 5%, that is the law. For official car, you take 5% of the value of the car every year as income in that benefit in kind. That is the law. So it is not something we derived. The law says if you are provided with official car bought by the company, they will take 5% of the cost of that car as income in the hands of the person who is using the car. So that's how we got the 5%. But because the person used it for only 7 months, we have to look for 7 months out of the annual amount. So that's it. There was nowhere the question told us 5%. We were the one that used our sense of knowing that that is what the law demands. The law says 5%. You can check with your textbook. So now let's see 685,417. 685,417. So that's it for benefits in kind. Then the next thing will be old employment. Old employment. Now, we did new employment, right? Now we have old employment, and the old employment will be from January 1 to May 31st, that same year. So we now have cash emolument. Under that, we have prior to joining Xenon Bank Limited, Mr. Oteje was on an annual salary of 32 million while working with Carbon Bank. 32 million. So you say salary is 32 million annually. Sorry, it is 32 million. 32 million. That's an annual salary. So we're now going to divide it by 12 months and multiply by the 5 months where he worked with that company, because it's from January 1 to May. So we will say 32 million divided by 12 multiplied by 5. 13,333,333. So it should be 13,333,333. Now, you are wondering why we didn't write it in the first Naira sign and we put it straight in the second. It is because I have seen that is the only item. If there are more than one item, I would have put it in the first Naira sign, summed them up, and put the figure in the second Naira sign. So we are done. So what I'm doing now is I'm going to be ticking all these ones we've done. We've done with this, we've done with this, 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 done with this. We are done with this, done with this, done with this, and now we've done with this. So that's it. So before we get to the additional information, let's add all the things we have here. So what we have here should be gross emolument. Gross emolument is different from gross income. So everything is getting by way of pay and compensation from the company is gross emolument. All right, so let's add them up. I have this, my first figure here. I have the second figure here, so I'll just take this second figure. I'll just take this second figure, copy it. So we copy it again instead of writing them manually again. I'm copying it to this place where the calculator is. So I'll just say plus, and I'll paste it. Okay. I will now put another plus. I have my third figure somewhere here. So this is the second figure. I have my third figure here. So I'll copy from this side to this side. So that's corresponding to my third figure. Copy it and I'll come down here. I'll say plus. I'll paste it. So 54, 910, 418. 54, 910, 418. 54, 910, 418. So that's my gross emolument. 54, 910, 418. That's my gross emolument. So the next thing to do is to less our tax exempt items. So I will say less tax exempt items. So we have them, I've marked them out. Annual life insurance premium. So this is 1 year. We are not going to split anything because we have calculated 1 year gross emolument. Now, so we are going to be removing all these tax exempt items. Life assurance is 3 million. So this is life assurance premium, and that's 3 million. Then the next one is so that means we've dealt with this. His employers deducted and remitted on his behalf the following mandatory deduction. So this is for NHF. NHF is 4.9 million. NHF 4.9 million. NHF means National Housing Fund. In practice, National Housing Fund is calculated as 2.5% of basic salary, but they didn't tell us to do that. They gave us the figure, so we use the figure we are given. So we have dealt with this. Now, this particular figure is for pension. 1166667. I remember this figure. So this is pension. 1166667. So we are done with this, which is figure. Then NHIS. NHIS is National Health Insurance Scheme. 350. So this is National Health Insurance Scheme. So that's 350. Okay, and that's all for we've calculated, we've used all the figures. We've used all the figures. So what do? We'll add this up here. So let's use this 3 million plus 4.9 million plus 1,166,667 plus 350,000. That will give me 9,416,667. 9,416,667. Let me be sure. I got it right. 9416667. Now, because I said less tax exempt items, I'm going to be putting them in bracket because this sum here is the tax exempt items. So when you remove tax exempt items from your gross emolument, what you are calculating is your gross income. So this is your gross income. So we are removing 9 million fraction from 54 million. So I'm going to carry this figure, which is my 9 million. I'll go to where I have that 54 million. And I will just simply say minus, and I'll paste my 9 million something to remove it immediately. And I get 45 million 493,751. 45,493,751. Let's be sure we got the figures correctly. 45,493,751. And that's fine. We have our gross income, right? So after getting your gross income, you will need to calculate something called CRA. So I will come here and say less CRA. CRA means Consolidated Relief Allowance. Let me write the formula. The formula here is you will never be giving your CRA, you're the one to calculate it. So your CRA will be 200,000, 200,000. You now compare it with 1% of gross income. So don't ask me why are we getting 1%, is the law. 1% of 45 million 493,751. Let's calculate 1%. Let's look at which one of them is higher. So I'm going to copy this figure, because that's the gross income. I'll take it to the other calculator. And I will just simply paste it. Then I will look for 1% of it. So I'll say times 1 divided by 100. That will give me 454,938. So I will say 454,938. So between these two, I will say choose the higher. Choose the higher. So it's either you take 200,000 naira flat is the law, and compare it with 1% of the gross income. Whichever is higher, that is what I'm going to choose. So I've chosen the higher one here, which is 454,938. Then I'm going to add something. So I'm going to add 20% of 45,493,751. Okay. One way of doing it is this. Instead of taking this thing again and doing 20%, this one I just calculated here happened to be 1%. So I'll just times it by 20. It's still the same thing. That's the 20%. So that is 9 sorry 0.99098,750. 9,098,750. So this is your 20%. So if you are working 20% of this, you will get this figure. So these two figures here is your CRA. So you will now add these two together. So I'll have my so this is the first one here. Let me copy it out and paste. So this is the first figure. I'm going to add it to 454938. And I have 9553, 9553, 9553, 688, 9553, 9553, 668. Let me be sure. 688, not 668. So this is 688. Now, did you see I said less CRA? And this is your CRA. So all I will now do here is to put this in a bracket because I'm lessing it. So I'm going to take it here. I'll take this figure here. This is my CRA. I'm going to go and less it from my gross income. So I already have my gross income kept somewhere. I'll just simply say minus my CRA. And that gives me 35,940,63. 35,940,63. Okay, let me be sure that we've gotten it right. 35,940,63. Now this is going to be your taxable income. So this is your taxable income. So that's this. The taxable income is this. Now we're going to be looking at the tax because that's what we are asked to do. So we will now say tax liability. Now we'll be breaking these things down into smaller pieces. We'll be breaking them down. So it's like giving you 35 million coins for you to count. 35 million coins. And they're asking you, as you're counting them, they are paying you a particular amount of money. So the first 300 coins, so that's what we mean, the first 300 coins, how much will they pay you? So you now say first 300,000 first 300,000, how much will they charge you? The tax you will be charged is 7%. So 7/100 times 300. So you say 7 divided by 100 times 300,000. That will give me 21,000. So this is 21,000 of your tax here. So it's as good as out of this 35 million, you have removed 300 first, and they have charged you 21,000. Then the next set of 300,000 is going to be charged at 11%. That will give you 33,000. So 600 is gone. Now you go again. Next 500,000, you'll be charged at 15%. Okay, so that will give you 75,000. Then the next, so at this point, we have counted 1.1 million. So the next 500,000, now this one will be charged at 19%. That will give you 95,000. You can confirm at your own time. That will give you 95,000. So at this point now, 1.6 million has gone. This is 1 million, 500 and 500, that's 1 million plus 600, that's 1.6 million gone. The next one is next 1,600,000. Remember, from this first 300 to this 500 happens to give you a total coins left as 1.6. Now you are bringing another 1.6. Now this will be charged at 21%. That will give you 336. 336,000. Okay, so at this point, everything here happens to be 3.2 M. Everything here at this point, if we add them together, happen to be 560,000. So now the next thing here is you will now bring the balance. Balance. Now your balance will be, this is the whole thing that you want to find tax on. You will say 35,940,063 minus the ones you have already done. You have already done 3.2 million. Now the difference, when you minus them, the difference, you charge it at 24%. You charge it at 24%. So let's do that now. So this is the full amount here. If you minus 3.2, million. This is the difference, the balance. Now this balance, you find 24%. And that will give me 7,857,615. 7,857,615. 7,857,615. So that's what it's going to be. Now, this is the last part. Just simply add it to this 560. That will give me 8,417,615. 8,417,615. If you like, you can add it from beginning here down to the end. But me, I already know from my calculation, years of calculation, that when you add from here to here before this last part is 560. So this is your tax liability. So at this point, I don't know if you have any question. If you have any question, please state it now before we proceed. So give us 1 minute or so to see whether we have any question before we proceed. If you have no question, you can type no question. Okay, so by the fact that there is no response at this point, shows that there is no question. That's fine. So that is understood. All right. So we'll go to the next part. Okay, so we've done one question now. This is on personal income tax liability. Let's look at question number 5. Question number 5, this is Dr. Okon, John Okon. So this is a person. So because we are dealing with a person, you might be expecting that this is a personal income tax. But now you say created a trust. The question has now changed. So this is settlement, trust, and estate. So that's a topic on its own, settlement, trust, and estate. By means of this question, I'm going to be solving and telling you what it entails. Now, this man, he created a trust. It's as good as he wrote a will before he died. So he created a trust for his children. His children are, this is 1, 2, 3. So Kufre, Basi, and Samuel before he died in 2015. Now, as at December 31, 2015, so because this is an estate settlement trust, the year of assessment is going to be preceding year basis. Now, as at December 31st, 2015, so it means his year of assessment for this should be 2016. The following information was extracted from the record. Now, this is adjusted trading profit for the year. So we have for the year ended, this is for December, the trading is this. He has a rental income gross. Now, we are happy that we are giving gross. Assuming we are giving net, we would have made it to gross. And how do we make something to gross when we are giving net? For rental income, we know that 10% is the withholding charge that has been charged. How we make it to gross is to multiply by 100/90. Or you divide by 0.9, anyone. Other miscellaneous income, add all of this together. Then we are told that the following information is relevant. Excuse me. Now, fixed annuity, fixed remuneration. So there are three types of allowable expenses. We have fixed annuity, we have other operation expenses, then we have fixed remuneration of the trustee, then we have variable remuneration. When we less all of these, your gross income, what you have here is your computed income. So computed income. So the problem we will have is this variable remuneration. So this is where we will have issues because we are told that it is going to be 5% of computed income. And we are supposed to deduct this to get our computed income. So we are going to be applying a formula. Your variable remuneration will be, we'll be using something as 5/105. Assuming this was 3%, it will be 3/103. Assuming it was 8%, it will be 8/108. If it is 10%, it will be 10/110. So we'll add this 5, anything we have here, we'll add it to 100 at the denominator. That is what we'll be using. I just want to point that out to you before we start. So now let's look at what we are asked. We are asked to calculate the net computed income. Computed income, which is this. We want to find the net computed income. So we are looking at computed income. How do we find the net computed income? We need to remove all the discretionary payments. Trust provided discretionary payments towards the maintenance of the education. So this is school free, Basi and Samuel. Then there is capital allowances, of course. This capital allowances is for business. 300 of the other expenses are not tax deductible. What they mean is that out of these other expenses, 400, 300 of this are $300 100,000, we'll be using 100,000 as our allowable expenses. So it means here that this one will be deducted from this. Just a moment. Okay, so let's get back to our. So when we are solving it, you'll be seeing. So it means that this 300 will not be used for anything other than to deduct it from 400. Then here it is stipulated in the trustees that the beneficiaries are to share half of the distributable income equally. So when we get the net income, when we get the net distributable income, we are going to divide it by half. So let's assume that the income is X. We are going to divide it by 2. Now this divided by 2, we are going to share it equally. So we're also going to divide it by 3. So it's as good as saying when we have X, we are going to divide it by 6. That is what each of the beneficiaries will get. Because this is like saying X over 2 times 1 over 3. That will give us X over 6. So that is what each of them will get. So now let's apply this insight into our question. Question number 5. I will take here, let me rule this out. This question is done. Now let's say this is still insight. March 2024. So this is ATS3. And I'll say question number 5, Mr. John Okon. Mr. John Okon. So what are we asked to find here? Net computed income and amount to each beneficiary. I can join them together. I can say net computed income and amount to beneficiaries for year of assessment 2020 what? 2016. So this is 2016. So that's what we are going to do. All right, so let's start. So we have 3 beneficiaries and the trustees. So what I will come here, let me say this is trustee. So this is this trustee account. You put the names of all the beneficiaries. They will have their own account. Kufre, Basi, Samuel. Kufre, Basi, Samuel. So all these are their accounts. Everything we are doing is done in the trustee. But anything that belongs to each of these beneficiaries will put them under their own names. But every other thing is on the trustee. So we'll start adjusted trading profit for the year. Trading profit 2.4 million. So we'll come here. Trading profit. We say is put it under the trustee 2.4 million. Now immediately you see trading profit, check if we have capital allowance. If we have capital allowance, just deal with it immediately. So capital allowance is 240,000. Excuse me. Capital allowance 240,000. So you are removing capital allowance from the trading profit. Okay, that's fine. We'll now go to the remainder. So we're done with capital allowance and trading profit. So we'll go with rental income, 1.1 million. 1.1 million. Rental income, 1.1 million. Then the next one is other miscellaneous income, 1.1 million. Other miscellaneous income, 1.1 million. Okay, so what you are now doing is to add them up to get your gross income. So that will give us how much? Let's calculate. 2.4 million minus 240,000 plus 1.1 million plus 1.1 million, 4,360,000. So that will give me 4,360,000. All right, so that's your gross income. So we've done this and this and this and this. Now we are going to the expenses. So we've done gross income. So let's go to fixed annuity. Fixed annuity. So you will now say less allowable expense. So the first one is fixed annuity. So the fixed annuity, how will you treat it? Fixed annuity is given to just Kufre. He's the only one getting fixed annuity. 120,000. So you just go under Kufre. Kufre is the first. You go under Kufre and put this 120,000 because it is going as income to him, but it's leaving the trustee 120,000. You put it in bracket because it's leaving the trustee and it's going to Kufre. So these are the expenses to the trustee and income to the beneficiary. Then the next one, so we've done with this. Before we go to the fixed remuneration, let's look at other expenses. Other expenses, they said is 400. So we'll come here. Other expenses. Open the bracket. 400 was given to us. Okay. So we've done with this 400. But we are told that 300,000 out of it are not tax exempt. So we have to remove the 300 because they are not allowable. You say 400 minus 300. So that means it is 100 that is allowable. Now that we've done with other expenses, the next thing to do here is to go to, so we've done other expenses. Now we'll go to the fixed remuneration. So here, this is fixed remuneration of trustee. So trustee, they are going to pay him his salary. This is the fixed part. How much is it? 80,000. So it will go away from here, 80,000. All right. So the variable part, variable remuneration of trustee. Now that requires workings. So let's do the workings together. Let's do the workings together. It's going to be this gross income. Gross income here is 4,360. So we're going to say 4,360,000 minus all of these expenses you've done here. This is 120 plus 100 plus 80. That gives you 200. Okay, no, 300. 120 plus 80 is 200 plus 100. That's 300. So that gives you 300. Anything you have, you just multiply it by 5 over 105. So let's do that now. So we already have 3 million. We already have that. Say minus 300,000. Now let's look for times 5 divided by 105. And that will give me 193,333. So that will give me 193,333. We'll come back to verify this particular answer if it is correct. So what you are getting here is computed income. So that's the net computed income we are asked to find. So what we'll just do now is 193,333 is what we have here as our variable pay. Let's copy it. Now if we were to add it to this 300, that means all your allowable expenses happens to be 493,333, right? Now let us remove it from this 4,360,000. That gives us 3,866,667. So that gives us 3,866,667. That's our computed income. Now, just to test if we are correct, we were told in this question that the variable remuneration is 5% of total computed income. So let's see if it is going to give us 5%. If you check it here, let's look for 5%. It gives us 193,333, which is the same thing. So that means we are correct. All right, so we are correct. So this is our computed income. The next thing we'll be doing here is to less discretionary payments. So we less discretionary payments. So what are the discretionary payments? So we've done this, so we've done this, we've done this, we've done this, we've done this. We are now left with done this and this. We are now left with discretionary payments. Kufre is 240. Sorry, Kufre is 240. So I'll come here and I'll write 240 here because 240 is going to Kufre. What else? Basi is 230. So the next person is Basi, 230. And Samuel, we are told, is 250. So these are the things going out to them. So that means we've done this. Right. So what do we do? You simply add all of this. 250 plus 240. So look at what I usually say without using my calculator. 250, 500, 750, 740, 730, 720. So this should be 720. Let's calculate it just to be sure. 240 plus 230 plus 250. That's 720 I said. So that's 720 is going away from here. 720 and it is given to these people. Now after discretionary payment, what you have here is net distributable income. So this is a net distributable income. So what we'll do here is we'll remove this. So this is our computed income. We'll remove this 720,000 and we have 3146666. 3146667. Now this is our net distributable income. Then we will now say share of income to beneficiary, and we said we are using 1/6. I told us how we derived our 1/6. We said half is distributed. So this is X, is the distributable income. We are distributing half of it, and this half is to be shared equally by the 3 people. So that gives us X/6. So that is like 1/6. So that's what we are going to do. We are going to 1/6 of this is what is being shared equally. So what we'll do here is, this is the figure, we'll now divide it by 6. That is what each person is taking. 4, 5, 2, 4, 4, 4, 5. 5, 2, 4, 4, 4, 5. 5, 2, 4, 4, 4, 5. 5, 2, 4, 4, 4, 5. I'm just rounding it up. 5, 2, 4, 4, 4, 5. Okay. 5, 2, 4, 4, 4, 5. If I multiply this by 3, it gives me what I have deducted. 1573. 335. 1573, 335. So this is what was distributed. So this one is income undistributed in trustees' hands. So this is in the hands of the trustee. So you simply say this was not distributed. You remove it from this is what was distributed. You remove it from what they had. 3146667 minus this. So you see, it's supposed to be exactly half of it. But you know of the rounding error. When we are rounding, that's why it is different. So we'll take it like this. 1573,332. Normally we said half of it is to be distributed, half is not to be distributed. This is the half that is not distributed. The reason why this is different, they're not the same thing, is because we use 524445 instead of 0.5. So all you now do here is, the next one will be income in the hands of beneficiaries. So income in the hands of the beneficiaries is going to give us how much this person is having, how much this person is having, how much this person is having. So what I have here is Kufre has 120 plus 240, that's 360. 360 360 plus 524,445. 884,445 for Kufre. 884,445. That's for Kufre. For Basi, it's going to give us 230 plus, because there's nothing else again, just this 230 plus 524,445. That will give us 754. 754,445. This is the only difference between Samuel and Kufre is just 20,000 difference. So this should be 774,445. And that's the income in the hands of the beneficiaries. So we'll see what ICAN did here, and that is the same thing. That is the same thing. The only difference here is instead of the 5 we put here, they put 4 and they put 4. That's not a problem. It's the same thing. 667. If you are to share the 667 into 2, it will not give you 4 here. Anyway, even if you divide this by 3, exactly will not give you this. So it's approximation. So no problem. It's still the same thing. Still the same thing that we did. And so that's how you are going to solve this question. At the end, we got trustees' income and the income in the hands of the beneficiaries. So that's how this question is being solved, and that's it. Question number 6. Question number 6 will be treated later. I don't want this video to be too long, so this is how far we can go for this video, and I want you to look at all that we've solved today and see how you can practice them to better your skills in taxation. So thank you so much for the time spent in the class. I will see you again in the next class.